All right, so we're diving in deep today, folks, with a stock market crash that seemingly came out of nowhere.
Yeah, pretty crazy one, too.
Definitely seems like it. I mean, our sources are throwing around numbers like a $1.7 trillion crash and headlines that just scream panic, Trump in panic mode, things like that, even mentions of Elon Musk reacting to the news.
Oh, wow.
Yeah, it's definitely got everyone's attention. And in this deep dive, we're going to try to get to the bottom of this financial earthquake, so to speak.
Yeah.
Try to figure out what could caused it, how these big names like Trump and Musk are involved, and of course, what it all means for investors like you listening out there.
Sounds good. Yeah, that's a big one.
Yeah, it is. And what's really interesting is that while the source material we've got is full of this dramatic language and talks about all this panic, it's surprisingly vague about what actually triggered this crash.
Interesting.
Yeah, and it almost feels like they're trying to amp up the mystery, which, might be part of the problem.
Yeah, that's a good point. You rarely see a stock market crash this big without a clear culprit. A specific event or a series of events that you can point to. But here...
It's like a ghost.
Right, exactly. It's like a financial ghost story. And that kind of silence just adds to the fear and uncertainty.
Oh, absolutely. Because when people don't know what's going on, they tend to overreact, right?
Yeah, they panic. They start selling off their stocks, pulling out investments, and that just drives the prices down even further. It becomes a self-fulfilling prophecy.
Oof. So not a good cycle to get caught in.
No, not at all.
So, okay, let's play detective here then. What clues do we actually have? The source does mention rising inflation, right?
Right.
Would that be one of the factors that push things over the edge?
It could be a big one for sure. I mean, when inflation is high, it erodes people's purchasing power.
Takes everything more expensive.
Exactly. And then businesses have to raise their prices. Consumers start cutting back on spending, and that squeezes corporate profits, slows down economic growth, and makes investors nervous.
Right. They see the warning signs.
Exactly. And they start thinking, are my stocks really worth what I paid for them?
And then they bail.
Yeah.
You mentioned interest rates earlier too, but haven't those been relatively stable lately?
You're right. They have been fairly predictable.
So is there anything in the source that suggests a sudden change there that could have spooked the market?
Not a sudden change necessarily, but even the anticipation of a future rate hike by the Federal Reserve can be enough to make investors rethink their positions. It's all about expectations and how those expectations influence people's perception of risk.
Yeah, so if investors think rates are going up, they might sell off stocks preemptively.
Exactly. It's all about trying to stay ahead of the curve, even if it means making moves based on speculation.
And then, of course, you got the whole political angle, which our source seems to be really playing up.
Yeah.
They're claiming that Trump is in panic mode. But, I mean, wouldn't a seasoned investor like him have dealt with market ups and downs before?
Well, sure, he's seen his share of market fluctuations, but this isn't just a little dip. We're talking about a massive crash, $1.7 trillion gone.
Yeah, it's a different beast.
Right, and on top of that, the political climate is different now, too. Even if Trump himself isn't panicking, his supporters, many of whom are also investors, might be feeling the heat.
Oh, I see.
And that shift in sentiment amplified by the media, all the headlines and the 24/7 news cycle, it can definitely impact how this event is perceived and how it could potentially play into the upcoming 2024 election.
Right, because now it's not just an economic issue, it's a political one, too.
Exactly.
Speaking of big names reacting to the crash, our source also mentions Elon Musk.
Oh, right.
And they don't give any details about what he said or did specifically, but the fact that he's even mentioned it all, suggests that this crash is being felt way beyond just Wall Street.
Absolutely.
Yeah.
Musk's perspective is interesting because he's not just a CEO. He's like this icon of innovation and disruption.
Right, the ultimate disruptor.
Exactly. So his take on this crash, whether he sees it as a temporary blip or a sign of something bigger, it could really influence how other entrepreneurs and investors view this whole situation.
Right, because if even Elon Musk is worried, then maybe everyone should be.
Yeah, that's the kind of weight his opinion carries.
So what about the everyday investor then? The person who maybe has their retirement savings tied up in the market. What does all of this mean for them?
Well, a crash of this magnitude, it can be really tough on people who are close to retirement or who have a lot of their savings in stocks.
Right, because they could see their nest egg shrink significantly.
Yeah, and that could force them to delay retirement, change their lifestyle, make some tough choices.
And that can ripple outwards too, right?
Absolutely. Less spending by retirees means less demand in the economy, which could lead to even more problems.
So we've got this dramatic crash. The causes are still murky. There's potential political fallout. And now we've got a tech titan weighing in. It's a lot to take in.
It is, yeah. I mean, the big takeaway here is that uncertainty breeds more uncertainty. We need more information about what caused this crash to really understand the long-term consequences.
Right, because right now it just feels like we're dealing with a bunch of unknowns.
Yeah, but it does highlight how interconnected our financial system is, how something happening in one area can have a ripple effect across the entire globe.
Right, so we've uncovered a lot of potential domino effects here. But without knowing for sure what tipped the first domino, it does feel like we're missing a crucial piece of the puzzle.
And that's the question I want to leave you with. How might deeper research into the root causes of this crash change our understanding of its potential impact? What other factors besides inflation and interest rates might be at play? It's something to think about as we navigate this new financial landscape.
Absolutely food for thought, for sure.
Definitely.
Well, folks, that's our deep dive for today. Thanks for tuning in, and be sure to join us next time for another deep dive into the news that matters.
See you then.
Take care.